Hey, this is Danielle. Today I'm going to show you how I day traded the SPX going into the close and made about $450 in just about 25 minutes. This was good for me today because I did have a little bit of a rough trading day. I made a mistake on Meta. I got out too early on my earnings trade, which would have been fire. And then I lost money on an IBM earnings trade too. So this win that I got here at the end of the day definitely helped my overall numbers on the day because I had a little bit of a rough morning. So let's go ahead and look at this SPX day trade. Now, the market has just closed about 3 minutes ago. You can see right here that this is profit of about 75%, which was $450. What I ended up doing on this was I just sold a neutral iron condor. Super boring, nothing exciting. Basically, what I did was I noticed in the options chain that the 50-50 strike had a ton of open interest. Now, the SPX options are very heavily traded. There's so much interest surrounding these. And what happens, for one reason or another, is that people are trading the same strikes. And so what that does is for some reason, it makes the price go up and trade to those values. So when you're an options trader, what you can do is you can use strategies like, for example, selling an iron condor if the ticker was already at that strike and you think it's going to stay around that level. Or you can buy a butterfly if that high open interest strike is either higher or lower than where you're currently trading. Okay. So the difference is iron condor if you're already at the value, butterfly if you think you're going to go up or down to that value. Okay. And then what you want to do is you want to use your market internals to determine if you think the price is going higher or lower. So in this case, it was about 25 minutes until the close. I noticed this high open interest was happening. I just finished my Fox segment. I was getting ready for Trader TV Live and I had just, half an hour to put a trade on. So what I did was I went ahead and sold the 50-50s. I sold the calls and the puts. And then I bought some outer wings as protection. So I bought the 50-60 calls and then I bought the 50-40 puts. What that did was it created a credit that I had sold, and I was able to earn $5.95 for that trade. Now, the idea with this, because these are SPX 0 DTE options, which it's now just making that line right there because the market has closed. But before, when I put on the trade, it was saying that there was about an $8 expected range into the end of the day. And so to be able to sell a premium of about $6 was actually really good. So I thought, oh, premiums are pretty good right there at the end of the day. Let's just go ahead and try this. So I went ahead and sold that. And then basically what you want to do when you think that there's going to be a neutral move, and we're actually starting to see the indexes rally after the market. So that's a good sign for earnings that are coming out right now. But we were talking about before. So if we just scroll over a little bit, I can show you what I was looking at. So essentially, we just had this trade that was just wasn't really doing anything. It was kind of back and forth. It went down, it went up, it went down. And then this is, what just happened after earnings were announced. But when you see a trade like this, especially before a Fed announcement, it can also be right before a critical earnings announcement. Today, we have Microsoft and Alphabet reporting. So it's pretty typical to see the market kind of back and forth, just really unsure. And then on top of that, when you combine that with the market internals, in this case, when you're looking at the ticks, this is the biggest tell to me whether I want to make a neutral trade or whether I want to make a directional trade. And in this instance, we had a couple different high values on the ticks. So we did have the ticks going up above plus 600 and up below negative 100 or down below negative 100. But in this instance, do you see how the ticks were going up and then going down and then going up and then going down and then going up. That is a good day for you to sell some neutral premium, especially in 0 DTE SPX, because with those 0 DTE SPX options, that premium is decaying, and it's decaying incredibly fast. That is how I'm able to sell about $6 a premium. And on a 25-minute timeline, that premium just goes down and down and down as the market trades higher and it trades lower and it trades higher and it trades lower. Nothing exciting is happening. And then at the very end, what occurred? Well, you had a situation where it didn't close exactly at 50-50, but it doesn't need to close exactly at 50-50. It was close enough, okay? So by selling that premium for $5.95, at the end of the day, this is saying that it's worth $1.42. And that is because this strike right here, it's actually going to be this one right here, the 50-50 put, is going to be in the money by about $1.58. So it's not perfect. But that's why you have that premium remaining. There's still that value in that option. So that's going to subtract from the possible max gain, but I don't really care. I'm not trying to get the max gain. 75%, that is perfect for me. That is fine. That's good. It was a boring trade at the end of the day, but it helped me make back some of the money that I lost on IBM. So that is my recap of the SPX 0 DTE neutral strategy that I use sometimes when the market's a little bit choppy. If you have any questions, let me know in the comments below. I'll definitely be covering more 0 DTE SPX trades, and I'll let you know when I get another one. See you in the next one.